Good morning and welcome to the pre-market report for 5th September 2022. Now before we start the pre-market report, I'd like to remind you that you can subscribe for my market services by sending a WhatsApp to the number shown in the information box below. I shall tell you more details about it on the different plans and answer any questions you may have. Now on the global news front, the first major news is that basically Europe is looking at a bleak winter. This is the Russians have shut down the gas supply indefinitely as of now, and with the energy prices about 4 to 5 times above the average in Europe, they are going to have to go into rationing, and the energy prices will have to rise further, which will damage the economies. Also, Germany announced a 65 billion euro inflation busting package, but I believe that's now going to be again smashed by this gas issue, which has hit them. The second global major news is that China has extended its lockdown in many districts of the western megacity of Chengdu and ordered mass testing, and also in 2 other cities it has started tired lockdowns so as to try to control the spread of COVID. And then basically the other global news is that, which is positive, is that the OPEC is having a dilemma over whether to increase or decrease the output due to the global economic slowdown. So that dilemma will help the Indian market due to its heavy reliance on the Indian economy on oil. And basically the negative news is India's exports to China have dipped by about 30% in April to July, which is not positive. And then the first quarter GDP growth is below expectations, which is a cause of concern, as said by a former ex-RBI governor. So basically that is the only news on the local and global front. Everything else is more company specific, hence I shall not cover it. Now when we come to the stock front, we see that the NASDAQ is basically trading in the same place. It has held the support zone which I had given in it for the prior two trading sessions plus today's. The future is holding it as of now. So it'll be interesting to see how the index holds and continues at this support zone, because a break of this would trigger a quick fall to here. However, if this holds, then we can expect a climb towards basically the 15 and 20-day moving average of the index. The next is the S&P 500. Now the S&P 500 is the same pattern. It has held the supports, and we can see good price rejection to the downside. Now I have not put any new supports below this. This is as I want to see if this holds, and if it does hold, then it will be an interesting thing to watch, as it will try to first initially form a box run between the 50-day moving average and this support, and if it breaks that, then back to the 20-day moving average. If it breaks this support zone, which is holding it as of now at 3929, then we will have a good decline in the basically weeks to come. So this is going to be a very important zone to watch in the S&P 500, and I believe the S&P 500 will set the tone for the other two indexes, that it's the most stable index and less reactive to factors such as news and all. The next is the Dow Jones. Now Dow Jones is basically also same pattern. It's been dilly-dallying around the support zone, good price rejection, and on Friday there was basically a bearish pattern at that point. However, even the future is right now holding there. So it's the same thing. It's basically to see if this support can hold all three indexes. If they break the supports which they're holding now, then that will open quite the floodgates in the next few weeks. As we will naturally have some bounces up, but it will be more of a gentle slide down towards quite steeper levels. Now when we come to our local indexes, now in the local indexes we are having a lot of push and pull in the box range because of number one, the Nifty is bearish, but the Banknifty is bullish. So that has caused severe confusion in the indexes, and we can see that event here. The Nifty is not able to reclaim the 20-day moving average, which is causing a trouble for it, while the Banknifty is not even going below the 20-day moving average. So it's going to be an interesting dynamic to watch on which of the indexes is able to take the driver's seat and take the market to the next direction. I believe if those support levels hold, which I had shared and I have highlighted again in the American indexes, then we can have an upwards trajectory. However, it will all depend on those supports holding. If those supports give away, then the Nifty's game plan will win and we'll have a slide downwards. So it's all going to be a deciding factor. I would say the global market right now and not that much the local market. However, the Banknifty is bullish and Nifty is bearish. Due to it, both are trading in a very volatile box range, and I expect the volatility to continue, and they both will determine who is going to be the driver's seat. If Banknifty breaks the resistance which I have shared here from a long time, which even stopped us here, then we'll have both indexes will go for next leg up. If the Nifty breaks a major support zone at this point, then we're going for the next leg down. So right now we're just going to stay within a box range. It's going to be volatile and the indexes are going to try to do their thing as of now. Thank you for watching, and do like the video and subscribe to the channel.